Welcome to Trading Sadhguru. Uh, Today is a big red candle. So, if you look at the world markets, you will see red on almost all the markets, including US, okay, Europe, and Japan, China. So, almost all the markets are down by at least 1%. Okay, so this is a global phenomenon which is now playing out since yesterday. Okay, so on our own, we were down by around 15%, 14 to 15%, okay, due to a domestic coupled with minor international factors. Okay, so now the US market has also joined in the downward journey. It is almost down by 5% from its peak. So where we are around 16% down from the lifetime highs. That is this point. Okay, 15 to 16%. In today's move, we are almost around 16%. So as you can see that this is the Parliament election day candle. So here you may find some sort of support. Okay. If at all market has any intention to reverse. Else you may see the market going further down towards this level, that is 2128. So let us limit our discussion only for the coming week, that is starting from 3rd to 7th. Okay. So we expect Nifty to touch 21,850 in the coming week, and in case this level is sustained, the level below this is sustained, so you may even see a bigger fall from here. Okay, so the fall will be very brutal below this, so we are anticipating a big move towards 21,300 in no time. Sustenance below 21,850 calls for at least 500-point movement on the downside. Okay, we will limit our view for the coming week till 21,300 maximum on the downside. Okay, so how should we be positioned? So before we discuss that, so let us also have a look at other time frame. So what we have been discussing is 1 day time frame chart of Nifty. Okay, so let us erase these things and move little ahead in time, that is 1 week chart. Okay, yeah, here it is. So this is 1 week chart, and yeah, these are Fibonacci retracements level. So 0.618, this is golden ratio is at 2236. So where we are now, 22,124, almost made 22,100. So just 100 points away from where we are now. So this is most likely to happen on Monday or Tuesday. So this level will be tested. Breach of this level will call for a move on the downside, that is toward 20,000 in the longer term. Okay, it may not happen in a day or two, but 2236 is broken, then all the way as per Fibonacci level, the next target would be 20,726. So this is in line with our expectation where we had seen the daily time frame chart. For the next week, we are expecting 21,300. Okay, on a long term, you may even see this level 20,726. Okay, these are for the reference purpose we are discussing. This level you may not see in the coming week immediately, but the thing is, there a reasonable support exists. Okay, So again below this level, this is 200 period moving at 200. This is not daily, this is weekly moving average. So this is falling around 19,478. So these are all the targets and downside if this downtrend continues. So we may see these levels in the coming month. Okay. So all these levels still here, 19,475. But for the purpose of our weekly analysis, weekly expectation, we will limit our downward view to 21,300 maximum, okay, on the downside. So how should we be positioned? We expected that market may be range bound to negative, but the very next day market has reversed and given a good directional move on the downside. So shall we get carried away by this down move? Not necessarily. There are some events lined up, even as per the news. That Ukraine president is going to visit the US for possible deal. So lot can happen between today and Monday. So market may perceive some news as positive, some news as negative, but more likely because he's personally visiting, so there would be a deal. So it will be considered as a positives. Okay. So you may see different kinds of statements from different countries on both the sides. So there will be some political action that will go on till Monday. So you have to consider these things for Monday opening as well as day trading. Okay. Okay. So most of the portfolios where small caps or mid caps are there, they are down by almost 30 to 45% down. The Nifty itself is down by 16%. Okay. Large caps are down by 16%. So these are all mid and small. So you may expect some more pain in Nifty heavyweight stocks. So there's further possibility of going down even in mid and small caps. So maybe around 5 to 10% more. So 40 to 55%. So already they have reacted and gone down by 30 to 45%. So 5 to 10% further down, it's likely, but there is a lot of pain which is yet to come in heavyweights, that is Nifty stocks, in case this trend continues. Okay, let us say that this trend is downtrend reverses. So market reverses. So till which point it can go? Okay, so the scope on upside is very limited. First, we will consider that is Friday's close as resistance. Okay, for tomorrow. For weekly, if there is any trend reversal, we don't see Nifty going beyond this level. That is around 22,700 level max on upside. Okay, if at all there is any short covering or reversal. Okay, so don't trade aggressively. Either use option strategies or um, where there is no directional movement, or because the market overall trend is downwards, you can take a little bit of mild negative bias also. You can opt for strategies where the view will be neutral to bearish, mildly bearish or strongly bearish. Such kind of options you can strategies you can pick up and you can enter trades. Okay. Otherwise, somebody wants to start a portfolio, or existing people want to create a new portfolio because the existing portfolio is very deep red. So you can think of opening another account or another portfolio where don't put all the money at a time. So you can make use of this 30 to 40% discount on mid cap and small cap stocks. So whatever you have, 10 to 15 or 20% max, you can invest at a time. Okay. And if market goes further down 5 to 10% more, then you can deploy the remaining 20 or 30%. Okay. Once the bottom is confirmed and market gives confirmation and reversal, then you can deploy the remaining 40 to 50% of the capital. Okay. That's how one's attitude should be. Don't deploy all your capital at once. Okay. So we don't know what lies ahead. So even if you look at past 20 years, you may even see a deep correction. Okay. So just also have a look at uh, what happened in the past, which are the major corrections. Yeah, here it is. So this is historical chart. This is somewhere the downfall tending to 2008, and this is 2020, that is COVID pandemic. So the correction here on the Nifty index is 40%. So this is more than 60%, around 64%. Okay, so these are the two major corrections in the years 2008 and 2020, and we are in this correction almost. We are already completed my 16% on the downside. So if we are correcting from the peak, we may expect to correct further before we again move upside. Okay, that's all for now. Take care. Bye bye.